Hi everyone. Today we did get a nice little grind up through the session, got clean above that 591 level, and then we did get that Moody's debt downgrade, and then we fell about 1% after hours, momentum bearish, RSI bearish on that flip. We're right back to that 55 EMA, and just like that, your support is once again 585.91. But let's take a quick look at the charts as we head into the weekend. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So in news today, we did get that Moody's debt downgrade. They cited the continuing government debt growth. And we've talked about this multiple times, and they are not the first agency to do this. So you can see that here. Moody's was the last one, keeping the U.S. sovereign debt at the highest rating possible, bringing it in line with its rivals. And you can see here they say the credit profile is heavily dependent on these investors, and they just see a little bit more risk with investors buying up U.S. debt and continuing to own U.S. assets, probably partially because of the trade war that Trump is initiating and has been doing over the past couple of months, could potentially dissuade people from buying U.S. debt, right? So that would be a problem, and now they've downgraded the debt. This is the last one, like I mentioned. I'm not sure why it had such an impact since everybody else had already downgraded the debt, and now they are AA plus instead of that AAA. Again, I just don't think this is really going to have a huge impact, but markets are taking it pretty seriously here, and we'll take a look at that on the charts. Moving over to fear and greed, we finished the week at a 71, up from a 69. A week ago, we were at a 62, so everything points to higher prices. We continue to go higher here, well above the 125 moving average. Strength, greed, breadth, greed. Even put-call ratio has now fallen all the way to regular greed. Volatility neutral. Safe haven demand continues to be a rocket ship, and junk bonds have seemingly bottomed out, at least here for the short term. So pretty overbought, and it's still crazy to me that momentum is still in extreme fear when everything else isn't. Moving over to the charts, we did get that clean break through the level, gap to it, rallied through, retested it, and everything looked good there. We did almost hit overbought conditions. I'm sure we touched it there at a 69.33 on the RSI. We're into this kind of consolidation high zone here. The next level is 597.63, but of course that news has been quite detrimental here. Big sells as soon as it came out back below the level. So 585 is the after hours support. Momentum fading. Is this the pivot point that we've been looking for? It's been all bullish the whole time. We've had pullbacks like this to the 55. Is this going to be another one where it holds and gets the continuation? We don't know for sure yet, but something to watch for as we head into the Monday. How much do markets place weight on that Moody's rating? And then moving over to those tasty charts here just for a second, you can see that ATR trailing stop 594.85. We didn't eclipse it this week. 594.23 was the close, so we did touch that level. Let's see what the high of week was. 594.50. So we're going to call that a touch. It's really, really close, within 20 cents of it. So very close. We're going to call it that zone. And we said this is probably where we were going to come to. If it could close above it, maybe we could flip to bullish, but at this point, I would say probably not. And then moving over here to the Qs, you can see we did not get above that level. It's basically unchanged on the day, almost a 0.5%, so a little bit better than unchanged, but didn't get above the high from the previous day. Here you can see it on the hourly. Got up to that level, and then we did sell off again, and then that Moody's move. The resistance didn't change, though. 523.24 was the level. We were overbought going into today. Momentum had already started to fade, so interesting timing there. Were we already overbought? Were we already at a key resistance? And now we're starting to sell, potentially. And you can see it's much weaker here on the Qs, already breaking this structure well below that 55 EMA. Your next support for me, all the way down at 509.74. And then looking at those tasty charts here, you can see I bought pretty much right at the beginning of the week, caught the rally all week, but now are we going to give it back here with that move in the after hours? We did close above that trailing stop, so you're technically bullish conditions here on the weekly chart. We didn't get that same flip on the SPY charts. Which one do you want to trade? Do you want to trade the flip on the Qs, or do you want to stay bearish off of the S&Ps? We'll see how we open up next week. My guess is the SPY is going to be the more reliable chart, but we'll keep an eye on both, of course. Moving over here to the Russell and the Dow. Both of these had great days, up about 0.8 each, but we're on the hourly charts here because I wanted to show this after hours price action. Got the Russell falling about 1.25%, down below 208 once again, closed well above it, broke well below it now, and your next support's going to be 205 there. Similarly here on the Dow, really nice nice move, big rejection, close to 1% down, momentum bearish, RSI bearish. Got some trend support there at 421, but look at these on the daily, really, really strong, and immediately giving all of that back and then some with that after hours move. Moving over to Apple and Microsoft. Microsoft had an okay day, up about a quarter. Apple was down about 19 cents, nothing crazy. Both of these were basically flat, but momentum on Apple fading. This looks like a double top to me. If this double tops, then you're looking for this to go potentially back down to these lows here. So you got the double top, you got the midpoint here. Does it crater back down to this kind of 182 to 176 area? Probably in here would be the target. So keeping an eye on Apple. Does not look super great right now. I think the only thing holding this up really is those stock buybacks. And then looking at Microsoft, big test of the level, did close above it, still hanging in there as this momentum continues to fade and as we are already super overbought. Moving over to Tesla and NVDA, both of these had a great day. Tesla was up 2%, absolutely massive, just continues to be a rocket ship headed towards that 355 level like we said it was, and continues to look like it's going to get there. And then you got NVIDIA up about 0.5%, holding in here pretty well, still looking for that 140 level. But for me, this is still distribution here. You can see we got here first in June of 24, and we are still here now in May of 25. So at this point, you want to buy things in this kind of 90 to maybe 101, 102 area. And at this point, anywhere above 130 to 150 is a sell zone. We have not maintained that price action for a while. Can it still go to 150? Yes. Is it going to stay there? I would say it's unlikely. Moving over to staples and discretionary. Staples continues to be a rocket ship, up 1.15%. Momentum swinging to bullish, RSI swinging to bullish, continues to be very, very strong there. Discretionaries did get a bit of a resumption. This is probably off of that Tesla play. Tesla continues to drive discretionaries higher, but we did break above all of these levels. Right now, you're kind of looking at this low. Let's go ahead and add a level there. Right about there, 219.18, right at the low of this kind of high, lower high setup. We got that midpoint here before we had that key turning point. That's what I would be looking for. It's pretty much in line with this trend line as well, right in there at 219. So staples still very strong, discretionaries hanging out, still looking pretty strong, at least for now. Moving over to breadth. Breadth has continued to stay very, very strong here. 20-day, even going back up to the 85 level after the up move that we saw yesterday. What does this look like after the sell-off that we got in the after hours? We're going to have to wait until Monday to see what that looks like, but my guess is this is going to be a bit of a turn here. So watching these closely, but the Monday data is going to be very interesting in my opinion. Moving over to bonds, J&K was up just a little bit, 13-12 cents in here, and then you can see TLT also up about a quarter. Nice little bounce off of that level, back above it. I didn't buy what I wanted to buy in here. I might look at the Monday and see where we're at, but I do want to buy some in this area. Didn't do it quite yet, still being a little bit patient. Again, this is a medium to long-term opportunity, but in the short term, I might want to be a little bit more patient here, waiting to see what happens, especially after the debt downgrade. Moving over to the VIX, you can see the VIX continues to sell here towards that next level. We said 1640 was the next zone of support. We expected it to continue to sell into that area. Maybe it throws a wick to it at this point, but it is continuing to sell, and it'll be interesting to see how it reacts after we get the full pricing in of that Moody's announcement. Moving over to my accounts, it says I was down a lot today, but obviously that is not going to be accurate. And the reason for that is this is pricing in the after hours move. So we finished the day at 521.50, and you can see $1,000 here. That is because of this move down to this 515 area, so $500 or so accounts for that move there. And then once this opens on Monday, these options are going to be worth much, much less than they were. So I had the loss on the option during the session because of the bullish push, but this will move back down and hopefully account for at least some of this down move. We'll see how it shakes out on the Monday. Otherwise, on the Roth position, I did hold that through most of the session, made money on that. So that was up on the session, up to $700 positive in that account. And I decided not to roll it out here. And that was really fortunate. Because of that after hours price action, I definitely would have been in the money. And I do expect to see a little bit more selling on that in the Monday. So right now, hoping this covered call protects me a little bit more for the Monday, and being patient on the Russell to see how that Moody's trade shakes out. Let me know down in the comment section what you thought of the downgrade. Do you expect markets to continue to react so strongly? Will we recover on the Monday and resume the rally? Or is this finally the turning point for at least somewhat of a pullback? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.